Welcome to the 5th annual FT Commodities Summit. I'm joined here by the new Chief Executive of Louis Dreyfus Company, Gonzalo Ramírez. Welcome to the summit.
Hi Neil, thank you very much.
2015 was a tough year for the industry. Perhaps you could just throw things forward. How is 2016 looking? The markets look very heavily oversupplied. Is that going to remain the case? When might they balance? How do you see things?
2015 was a market without volatility. 2016 is a market that has oversupply, as we've seen in 2015, in some products. Some of the products are starting to show signs of reactivity to the need to plant more. Sugar is a very good example. In sugar, you see volatility. In sugar, we are starting to have a very active role in the international trade. Corn to the contrary, corn has very low volatility, very big stocks in China, very big production acreage in the United States. So nothing really indicates that we will have a lot of volatility in the corn market. In the middle, you have a product like the oilseeds platform, where we have oilseeds, where beans, rape, canola, and sun integrate themselves into the basket of what we produce as byproducts and we sell to the end consumer, and palm oil. Palm oil is the one suffering the consequences of an impact on El Nino. There is this perception that the production will be lower. Palm oil is tractioning higher, and then that tractions soya oil higher, and that is giving some volatility. So all in all, I would expect that in an oversupply situation like 2015, 2016 is giving a little bit more opportunities in volatility and function to merchants like ourselves.
Okay, but there are still challenges, and China, I guess, is one of those in terms of the domestic agricultural policy and these large stockpiles that have built up, and what's going to happen to these stockpiles? Will they be released? What quality are they? How long will it take to churn through? How do you see the situation in China at the moment?
Okay, three questions in your question. Are the stocks very high? Yes, as far as we hear, they are very high. Will they release the stocks? Yes. How is the quality? We don't know. Carrying corn stocks for many years normally deteriorates quality. What I can tell you is that there is always a demand for a different quality. The main impact of the situation of stocks in China is basically that while China will continue to consume in a very strong manner, they will not be active in the international market. So while this depresses prices internationally, the good news is that the Chinese consumer is still buying corn.
So overall then, the situation that the ag market faces is one of oversupply. This is not a demand-driven problem whatsoever. It is very much on the supply side.
Yes.
And what can sort of sort that problem out? Do we need to see prices a lot lower in something like corn to stop, I don't know, US farmers planting more acreage next year? Do we need lower prices, I guess is my question.
Yeah, we need lower prices. You need lower prices if you wish to curtail production, if you wish to stop production. I think what you have is a situation where the US farmer is still responding to productivity in corn. When you incorporate technology properly into the corn production, the response of that hectare or acre that you plant is very good. And you have areas like the Black Sea or South America, which are responding actively towards weaker currencies. At the same time, you have a demand that is strong enough. So even if you don't stop planting, in 1 or 2 years' time, you will clean up that oversupply that you have because of the growth of demand. Now, how will the price structure be in the next 1 or 2 years? It should be here or lower, not higher, because obviously you have a situation of oversupply.
Gonzalo Ramírez, thank you very much.
Thank you, Neil.